following announcement has been paid for by the
Wealth Management Advisory Club. Hey everybody, it's the president of the Wealth Management Advisory Club, Jack Mitchell here. Welcome back to another exciting WMA club meeting. So before I send you guys off to our awesome meeting you guys are about to watch tonight, or today, a couple announcements on our end, as always. First off, we've added one meeting. We've also added one co-hosting event, and we've also filled in one of our bonus meetings for this semester. So, hold on. There we go. Okay, so I know that I've said last week that there will not be any meeting this Thursday because of the in-person career fair that WMA Club and FDU Silberman and FDU Career Center are hosting. Well, I kind of lied about that. There will be, but it is optional. What we are deciding to do is for that day, the 23rd, at the time of this recording, obviously, which was Tuesday, if anyone wants to come, they can. However, it will be virtually via Zoom, and I will be in the Mansion Room 12 doing it. I basically will be going over investment and risk management workshop, be doing that. That will be live streamed on all of our social media platforms. So again, I'd rather you guys go to the in-person career fair and then watch this later when we upload this on YouTube. It's just something for you guys to look at after the career fair because you will not be able to have us, be in person for that. So again, that is all going to be live streamed through our social media platforms. There will not be any live in person. It will not be, so don't go to Mansion 12 at 4 p.m. Do not, because there will be no one in there. So that's one. Now, the next thing, we have now added a co-hosting event, so we will be teaming up with FDU SGA, the Forum SGA, and the FDU Theater Arts to bring to you a Midsummer's Night Dream. And for anyone who does not know what that play is all about, well, let me give you a little snippet, just a little, of what it is. If you thought you were a fan of Shakespeare, think again. This is a romantic comedy with all the bells and whistles to keep you entertained. This hilarious show has couples dating and breaking up, stage fights, chases, a man with the head of a donkey. I'm not joking when I say that. A man with the head of a donkey, and so much more. So much more. The play was directed with a contemporary audience in mind, and you'll recognize the music, trust me. So we hope you'll check it out and support your fellow FDU students and cast and crew members March 4th. So, it is actually, funny enough, we actually have two sponsors for today's meeting. This, and the other one I'm about to mention later when we get to it. So, obviously, if you go to our link tree, we're not going to put it on the website, obviously, because it's only going to be there temporarily, but all in the link tree. If you go down our link tree and you click on a Midsummer Night's Dream, and you click that link, and if you use promo code, all caps, FDU Clubs, you will get 10% off. 10% off your ticket, which basically is going to be $5 to get in. And this only applies for Saturday, March 4th. So again, I know they're doing shows on March 3rd, on March 5th. If you use that promo code on those 2 days, it's not going to work. You have to use them on March 4th. It will be March 4th at 7:30 in the Dreyfus Theater. So basically, if anyone's not know where that is, if you basically go into the Dreyfus building and go straight ahead, the theater's right there. And I apologize to our Metro members. It's not on Metro. It's a Forum. However, if you want to come up here and watch it, knock yourself out. I might make an appearance there. I might. But you never know. Anything can happen. So it only runs for about 90 minutes and not including a brief intermission. So basically it'll just be 90 minutes going through and then that'll be it. So obviously please go and support. I know one of our e-board members, actually one of her friends who actually is, her friend actually is the, I don't know what is the president. I don't know I forgot what sorority it was. She actually is going to be in that play. So please go support them. Please support her. And let's have a fun night with the Midsummer's Night's Dream. And then finally, Witham. Yes, I know I've been saying this for a while that Witham might be coming in this semester, and I could finally confirm they will be coming in March 21st, 6 p.m. in the Mansion Room 13, Dickinson Hall, room 1170, virtually on Zoom, optional as well, and also our WMA Club socials as well. All right, so that's enough with that. The second thing, obviously, I know we've been hearing about a little bit of technical difficulties on our end with doing the live streams. We are looking into maybe switching from Fluden to Restream. So again, if that does happen, we will let you guys know. It probably won't be anything big. It's just that we're getting some technical difficulties on our end. So if for some of you guys have been watching the meetings on Instagram Live and on LinkedIn Live, they've been timing out. I don't know why that is the case, and I am going to do before next week's meeting is basically resync them. So hopefully that will work. And if it does not work, then we're definitely we're switching over to Restream because I've heard better things than Fluid. But however, with Fluid, we got a lifetime deal on them, so because we were affiliates with them. So again, we'll let you guys know if anything does change about that. Third thing, I know most people are probably a little bit confused about where to get their WMA club social because apparently. I'm not going to say who because I don't like to start drama here in the club, but somebody or some people have been spreading false information about the club. And I'm not happy about that. Not happy. So we want to make sure you guys are following all of the official WMA club accounts. So if you guys look to the left, you guys look to the right. For the first two, basically you'll follow us on Instagram, on Twitter, LinkedIn, on TikTok, oh my gosh, I apologize if Getter, Rumble, Fluden, and make sure you are going to the official WMA Club website. Yes, that site, this one, not the other one people have been telling you to go to, this one. Go to this website because on this link, like I've said in the past, you'll be able to watch all of our past meetings on there, get all of our sponsor deals, and get all the Zoom links, all your updated news about what's happening in WMA Club. All the information there is 100% accurate and basically updated by yours truly and the e-board. So again, please follow our official club accounts. Make sure you use that website because again, that is the only place you're able to get your WMA Club information. So please use that, this link right here. All right, finally, it is time for our weekly sponsors. Yes, I know, everyone, like, oh, why do you keep doing the sponsors? Well, we're going to keep doing it. So, today's sponsor is our good friends over at AICPA, the American Institute of Certified Public Accountants. So, AICPA is the world's largest accounting organization and the premier professional association for CPAs. With nearly 400,000 members, AICPA is a trusted leader in accounting and financial services, providing members with the knowledge and resources they need to succeed. At AICPA, they offer a variety of tools and services to help their members stay up to date with the latest developments in the accounting industry. Their members have access to resources such as CPE accredited trade. If anyone doesn't know what CPE is, Certified Continuing, Continuing Practice Education. Got that right. I was going to butcher that, so... certification programs, publications, technical publications, and more. At AICPA, they strive to provide their members with the most comprehensive and reliable services in the industry. They're committed to helping members develop their knowledge of accounting and financial services so they can provide the highest quality of services to their clients. We want to invite you to join AICPA and be a part of the professional organization. With AICPA, you can access the information and resources you need to stay in the industry in accounting and finance. So, if you click the link in our link tree or go to our website, go to the sponsors page, click AICPA, you are able to sign up, if you are a student, undergrad or graduate, a free AICPA account. I know people here have been telling y'all that, you're looking at a free NJCPA membership. But did you also know you can actually get a free AICPA membership? So you can. And believe me, it's worth it. So again, go to our link on our sponsors page or go to our link tree, click the AICPA link, sign up for a free AICPA account on us and on AICPA. Again, I'd like to thank AICPA for sponsoring today's meeting. I will apologize in advance. There were some technical difficulties with the speaker trying to show the video. So again, you might see some parts that might be delaying. Again, I apologize on that. Also, we have a special guest that are actually joining the meeting. Our advisor, Professor Patrick Koza, actually invited his retirement planning class to come in. So you might see some new faces on the screen there. So again, we'd like to thank you to your class actually come into our meeting. I was super excited to have this person come in here. Funny enough, actually after I was done with the meeting, the person emailed us and actually texted me personally saying thank you so much for bringing her in. So I'm super excited for you guys to listen to this meeting, to watch it, and if you guys are ready, and I know I'm most certainly ready, let's send you guys off to the meeting.
And now, our feature presentation.
Hello, everybody.
This meeting is being recorded.
Welcome back to the Wealth Management Advisory Club meeting. Just want to say before we begin, I want to just say welcome to Professor Cozen's retirement planning class for your special guests here today. But more importantly, today's special guest is Fern Tamborra from Primerica. I'm super excited for this meeting. So guys, let's please turn your cameras, ask a lot of questions, have a lot of fun with this meeting. And then WMA members, please stay behind a big announcement to make at the end. So Fern, the floor is all yours.
Thank you so much. I am really so happy to be with you tonight with all these beautiful young people and these brilliant minds. So thank you so much for inviting me. Just to get it out of the way, so this is a very regulated industry. There are some compliance regulations. Earlier, I sent Jack a feedback form, and if you would be so kind and indulge me, so at the end of our session today, if you could just complete one, it's very important that I have a written detailed list of all attendees. I really, really would appreciate that. So let me start by telling you a little bit about myself. This really was not my first career. I started in the investment arena. Well, I should tell you, I went back to college when I was 30. And after graduation, I went into the financial field. I was a trader with Prudential on Park Avenue. It was fantastic. It was actually in 2000. So it was just before the year of the tech crash, but I will tell you, it was fantastic. I mean, it's truly and typically everything you would think it is, or what it was like. You walk into this great building, a beautiful environment, TVs all over the place, 3 or 4 trading screens. Things were a bit different in those days because before the market fell apart from Professor Cozy is laughing because he knows this. It was not unusual to walk in to work for the day. And if you were lucky enough, we would call it you were the advisor of the day. And what that meant is that anyone who walked in with money, it was yours. And people would just walk in. They would walk in, be escorted to a conference room. I would go to meet with them and they would say, oh, I don't know, here's $50,000. Could you trade this for me? Or here's $100,000. Could you trade this for me? And of course, the answer was yes. Well, it really was a great time. After September 11th, I did change my business model. I started working only with my clients on a basis of financial planning, doing very detailed, comprehensive financial planning for whatever that client may need, not just basically retirement planning, but I would say that was really my niche. That's really what I love to do. Those were the clients I love to work with the most. So let me just see what I actually need to go over. So this is what I will say. No matter what your major is or really what your plans are or where you're going or you would like to go, having a financial education is just so incredibly important. Money doesn't come with instructions. And hopefully in the future, you're all going to have these incredibly great careers. You're going to make a lot of money. And it's very important to know what to do with that money. So just to start, I kind of want to share a little bit of my Wall Street experience with you. I have a short video, like a movie that I'd like to play. It's only about 2.5 minutes. Is that okay?
That is completely fine.
Okay, great. If anybody has questions while I'm speaking, I mean, we can certainly save it to the end. Oh, and let me just say, maybe I'll speak for maybe half an hour. Let's not go over that. And then I just want to spend time with everyone, answering any questions that you may have. So just bear with me. I am sorry, just give me a moment. It may have gone away. There we go. Okay, and just let me know, can you, just let me know that everyone can see this, is that correct? Oh, my God. So sorry. Oh, I'm sorry, are you seeing this video? No,
No, it's not coming through, Fern. Yeah.
I'm so sorry. Let me try again.
We're able to see the video, but we do not hear any audio.
Hmm.
Yeah, it's still no audio.
No, no audio. No, no sound?
No, no.
Let me get rid of it. I'm so sorry. Okay, so now I'm concerned that I'm not going to be able to. I'm really sorry. I'm really sorry about that. This is a great video showing Wall Street and it was really exciting and I love it, but I do apologize. So let's address retirement planning. Specifically, you're all pretty well versed in retirement planning. I know it's a very high level class. Okay, there. Jack, do you know why there was no audio on that recording?
Did you, when you share screen, did you click share sound? Because I think that might be the problem. When you share screen, it should you should have a screen that says like desktop, and then like in the bottom left, it should say share sound. You click that button, then you're able to share your screen, share what sound you're playing from your computer then. Or if not, you can send me the meeting. You can send me the video if you want. I can play it through my end.
Yeah, I don't know if I can do that actually for compliance.
Oh, okay. I
But,
thought it was a YouTube
wait a
video. I thought
minute.
it was that. I thought it was that. It was them. Okay. Put it that.
Actually, I don't see anything for the volume.
No, wait, did you, when you hit share screen, did you click like in the bottom left, there's like a share sound, like a check box, you just check it and then,
I don't want to, Okay, so I'm wondering if I'm going to be able to share the my PowerPoint as well.
Yeah, I think you're able to share your PowerPoint through here, I think. As long as there's no like audio that goes through it, then I think we're fine.
Okay, I do apologize. Okay, let's move on from here then. So there's some time and true tested theories that we use for everything. It doesn't even really matter if it's retirement planning or you're working with the clients to save for education or just accumulation. So the basic phases, right? So a client comes to you and says, "Can I retire? I want to retire. Can I retire? When can I retire?" So as I said before, so you meet with this client and the most important thing is getting data. And I always expect to get everything from a client. I want to know them. I want to know who they are. I want to know what their goals are. And I'm hoping they're going to be open and share everything with me. And then I go back to my financial plan. After I kind of do all the numbers and massage the numbers, I try to figure out how they need to invest. And at what rate of return. So what I would say, and I kind of wrote this here, so different income sources. When time comes for you to retire, there are different income sources. So we're Social Security, company pension, retirement plan assets, personal savings, and part-time employment. And knowing how much you should have coming in versus how you plan to live will determine how much you need to save to live comfortably during your retirement years. All right, let me see if I can bring up my PowerPoint. We'll go over a couple of slides. Oh, okay. Thank you for bearing with me. I do apologize. Okay, so we can just go over a couple of slides. Can everybody see this?
Yes.
Okay, I just want to make sure, because at least this doesn't have any sound on it. So for that, I apologize. I'm just going to go through a few of the slides. And the thing is, I know you're advanced, so I don't really know how much of this you already know. And there's only some important facts here. It says 46% of workers have tried to calculate how much money they'll need to live comfortably in retirement, meaning that there are so many people who just work and live and really never address the issue or even think about getting professional money management, which is a huge issue, which means there's huge opportunity here. And I think you would probably know this. And through my career, this is what I have come to know always. There's no golden bullet. When you hear about those people that just pick the right stock at the right time and they become very wealthy, that is really such a difficult thing to do. And no matter how well educated you are in the market, and I'm in the market every single day, you will never be right all the time. So anyway, the reason most people become wealthy is because they're disciplined savers and because they start early. So it's time in the market, not timing the market. So if we look at individual A, starts pretty early. Would be great if individual A started even earlier, but This individual started saving at age 22, put away $5,500 only for 8 years. And at age 67, there's no more contributions here. That money becomes over $2 million. As our next investor B starts investing at age 30, invests a lot more money. And of course, because we don't have as much time, it's because we lost those first 8 years, he ends up with $2,009,000, $209,000. Okay, so this chart, a one-time $10,000 investment at a 9% rate of return over 40 years becomes $361,000. This is the rule of 72. The rule of 72 says you take the number 72 divided by the interest rate, in this example, 3%, 6%, 12%, and that will tell you how long or how many years it will take for your money to double at that interest rate. At 12%, you can certainly see that our money doubles much more quickly and ends up with a lot more money. So when I work with very conservative investors, I always try to show them this slide and help them to understand that it's very important to not be so conservative. Actually, I am not a conservative investor. Again, this is the rate of return. Let's go to slide 10. The power of tax deferred savings. So this ties in, of course, to all your retirement plans and our individual IRAs, which would be, of course, traditional, non-deductible, and then our Roths. So no taxes deferred, meaning paying taxes every year on gain, dividends, and interest. This would be taxes deferred on return, and then, of course, fully tax deferred. And the numbers are huge. The difference are huge. And I hope you agree with me, because I'm not hearing from anyone, but that's okay. Those are our IRAs, traditional, deductible, non-deductible Roth. This is outdated, actually. So contribution limit 2023, 6,500 and 7,500 for age 50 and over, depending on your income limits. Dollar cost averaging, which I'm sure you all know. So this is a chart of investor A and investor B. Investor A starts investing in a fully rising market, investing the same amount of money. And investor B invests in a fluctuating market, meaning that he's getting lower prices per share for the same $100 a month. And what happens here is they both invest $600, and you can see the difference in the number of shares that are accumulated. Investor A ends up with 42.28 shares, and investor B 125.95 shares. And I just want to make a point here. When you're working with clients and helping people accumulate wealth, you need to manage their expectations. It's very emotional. Money is very emotional, and it's really your job to help manage those emotions. So when markets are falling, you kind of need to be there and hold those clients' hand and actually help them to understand the opportunity that is available. This slide is talking about very conservative investment, putting money, let's say, in a bank at a 1% rate of return. You're not getting 1%, of course, in your local bank. Interest rates have been historically low over the last 10 years at least. Of course, now interest rates have been going up, and with that said, there's a lot more opportunity to invest money in fixed income, which we haven't seen for a very long time. And we kind of talked about this before, income from a variety of sources for retirement. All right, and this is really important. Unfortunately, once upon a time, and this really wasn't even there, well, maybe at the beginning of my lifetime, people worked for 20 to 25, 30 years and walked away with a pension, something that they could always depend on. That doesn't happen anymore. It's very rare that companies provide pensions, which I'm sure that you know. And I think this is really the most important. It's up to you to fund your retirement. And with that said, I am going to close the PowerPoint. And closed again. Okay. Is everyone there?
Yeah, we're here. What you could do is you could stop sharing your screen.
Okay, absolutely. Thank you very much. I appreciate that. Stop my share. Here I am again. I hope that wasn't too boring. Those are basic principles. So I hope that was okay. I'm here with you.
No, that was terrific. So spot on. Thanks.
That was so nice.
So I think that especially for young people, and you've probably seen the same stats. I was talking about this today. It's almost a shame, as you mentioned too. Defined benefit plans really have gone by the wayside, and so young people, not just young people, everyone really not forced, but their only option is 401k plans, and it's amazing what a low percent of company employees are in their 401k plans, or at least to the matching component of the 401k plan. Do you see that a lot with the folks that you deal with, Fern?
I'm sorry, do I see them contributing, involved in the 401k?
Or do you see them not contributing? Do you have clients that have not been as much contributing to a 401k as really should? Or to your very well point, the whole aspect of time value of money, the fact of compounding and what the impact it has on such an early age versus waiting. Do you see a lot of that?
All my clients, I do not allow my clients to not put money in the 401k. I think it is the greatest benefit to not, I think everyone has to take advantage of it, especially if that 401k, if they're doing matching. If they are matching, that is free money. That is money on top of your salary. I would say, anyone, this is a great lesson to learn, and I really hope that you can do this. Take advantage of that, your employer's 401k. Take advantage of every dollar that you can get, and do not ever touch it. God forbid you have to. Do not touch that 401k. You would be so surprised. I tell my clients when I start with them, my young clients, I'm going to make you wealthy. If you do what I tell you to do, it's a no-brainer. I've done it so many times before. It's a no-brainer, but don't touch the money. People think, oh, I'm 35 and, oh, you know what, I lost my job, whatever. I do understand that things happen in life, unfortunately. It's not always a straight line up, but if you can do anything to avoid taking money out of retirement plans, that is not the first place you should ever go. And try not to borrow either. Don't borrow that money. You're paying yourself back with an interest rate. You've lost the time value of that money. That's something that you just can't make up. You can tell what I can share with you is I'm so passionate about this business. I so love this business. I so love my clients. Your clients, so let me talk about a little bit of an opportunity here. Primerica offers numerous opportunities for you. The first one is we can meet with you and we can help you invest $50 a month. You're already in an investment club. Maybe that's not what you want to do. We offer full-time work, we offer part-time work, and we offer internship. Depending on the school and your professor, you may be able to get CE credits for doing the internship with us. At the very least, we require you, when you come on board with us an internship, we're going to sponsor you for your licenses. We're going to make sure that you get a life insurance license, at least a Series 6, and some other licenses that you're going to need, like a 63, a 65, a 66, whatever it may be, depending on your individual situation. We pay for all of that. We give you all the education you need. We give you one-on-one coaching. We provide all of the education. It's all online. You can do it at your own pace. Now, I'm not saying this like come and work with me now. I'm just saying there's an opportunity for you if you love it. If you love it as much as I do, or even it's just such a great thing to have on your resume. Once you get investment licenses, you can take them with you no matter where you go. They're not stuck at Primerica. It's something you can put on your resume. You can come to client meetings. You can learn how to invest. You can learn how to use financial systems, how to do a financial plan. You can come to a meeting with me. You can actually deliver to the client with me. But I just want to know that there is opportunity. Should you like to know more, I'm definitely here for you. I just want to open it up for questions. I think I've spoken enough.
Yeah, no, Fran, I certainly can see and hear the passion in your voice.
It's hard for me to hear you, Professor. I'm sorry. You're a little muzzled.
Is it mine? Can you hear me okay?
No, actually. Can you come a little closer, maybe? See that? You were fine before.
Okay, what I was going to say is, yeah, let's open it up to questions from the students, but I can certainly appreciate your passion and your excitement in what you do. That's just terrific.
Thank you so much. I so appreciate it. I hope everybody in the business, I wish everybody loves it as much as I do.
Any questions from anybody?
Don't be shy, guys. You guys can put them in the chat if you guys want. Anybody?
And you offered internships. What internships did you offer?
I'm sorry, say that again? What kind of internship?
Yeah.
Is that your question? Yes, so it's an internship. What we would do is we do actually need to talk about the opportunity to give you more details. We do that on Tuesday evenings at 7, and Saturday mornings at 9 a.m. and we kind of go through the whole program with you. So if you'd like to come, please just come and join us. Send me your email on the form. What's your name?
Mitchell McPaul.
Oh, another Mitchell. Once I get your sheet, I'll send you an invite and I'll send you the link for the meeting. So what we try to do, especially working with students, is we want to fit Primerica into your life. We don't want you to fit into our life because your education is so important. I don't think there's anything more important than great education. And if you're Furley Dickinson, you're great. You're great students. You're really smart. We need you. You know, there's a huge transfer of wealth. We kind of call it the tsunami. All the money, it's about $97 billion that it's going to be in transfer to children of the wealthy. Correct, Professor?
No, that's true. Yeah, without question. We're seeing that starting, but it's only gonna grow. It's only gonna grow.
Great time to be in the business. Yes, so Mitchell, I'll send you an invitation and the link. And on the forms that you're going to fill out for me tonight, if you're interested, just let me know. I'll send you whatever you'd like. Or even if you can call me if you want. or email me, whatever you like. So I'm here for questions.
Anything from anybody at all?
Is it okay if I take a photo of everybody?
Yeah, no problem. We're
Where'd
doing
everybody go? Wait, where's
our
everybody
meeting as
going?
well, so don't
Oh
worry.
my God, this is so cute. I posted for my team, they love it.
Oh, it's amazing. All right, I guess I'll open the floor then for questions then. So I've asked, I think Mitchell probably knows this already, because I've asked this to multiple speakers who come into this club about CFP certified and also CFA certified. Like within, I know you talked about retirement plan tonight, but like in the wealth management field, do you feel like for employers, do they feel like, they look for applicants who are geared like towards like taking the CFP exam, taking the CFA exam, taking both? Because I've heard from both sides of the coin that it's like, oh, they prefer people taking the CFP exam, the CFA exam, both. But I just want to get your take on that.
Okay. So different companies have different expectations, right? So I built my book of business at Ameriprise. That's where I built it. That's when everyone was starting to take the CFP. Is it important to have? I've done all the classes. I've sat through all the classes. I have not sat for the exam. People say you don't need it, but there are a lot of people who, if they're looking for an advisor, they want you to have that designation. They want it. They want you to know that you sat through the courses, that you understand your financial principles. They want to know that you're smart. You're going to do the right thing for them. So I do, yes, I think it is important. I think it is important to do the CFP. I don't know for me if, you need the CFP and the CFA, but you should at least have one of those designations after your name. I think it's very important. Just like your degree. It's very important.
And Fern, I don't know if you're aware of this, but the wealth management program at Fairleigh Dickinson has been approved by the CFP board. And so the courses align exactly with the requirements. It's what it means is if a student takes the concentration and graduates, they can immediately sit for the exam if they so choose.
Oh, that's so great. The exam's very hard.
Yeah.
Do you not think the exam is hard?
No,
It's very hard.
Yeah. Yep. No, that's very true. That is very true.
Yeah,
But I also agree with what you said. I personally, I think that it doesn't have to be everyone in a firm, but if you go to a wealth management firm, there should be someone there that has their CFP. Because I do think that clients do look for those that understand that designation. It's like it's almost the same as when you go into a doctor's office, right? You want to see that diploma from where that physician graduated, and I always tell students that a financial advisor is akin to being it's their financial professional, no differently than your doctor is your medical professional. So you do like to see those things. I think they're important. But how about more questions from the students? Anybody, if they have anything that they want to throw at Fern at this point? Let me ask you something else, Fern. So are you seeing an increase in women in the profession? Because as you know, for so many years, women and minorities have been the minority in the wealth management field. What can you talk to with respect to that?
Well, I would say that it hasn't been like that in many, many years, right? So let's go back to 2000. So, I was in the business 23 years ago. When I walked onto the trading floor at Prudential, I was really one of only 2 or 3 women at the time. This was my experience. I walked into the trading floor. I worked for the wealthiest branch was on Park Avenue. There were big groups of advisors that worked together. It was all behind closed door, all behind, so you never knew what they were doing. But good for me. So they said, well, find a desk that you like. So I took the desk, I took the desk next to the ticker tape. So I took the desk next to the ticker tape so I would know what every single person on that floor was trading. Because I was new, they weren't going to tell me. But I had a good filing system. I would pick up the tickets and I would file them for them. I knew exactly what was going on the entire floor. But to speak to your point, Yes, there's so many women, and there's so many women at Primerica. It's not the old boys club anymore. I think it may be equal. I don't think there's really even more men now than women.
That's good. That's good. So the conversations you have with clients, how often does retirement planning turn up in those conversations?
Retirement planning always comes up. So since I work on doing a financial plan, I do the first thing we do. So there's different segments of the plan, of course, and the first thing is always a cash flow analysis. The second would be protection needs. The third is investment strategy. The fourth, always retirement planning. I don't care how old they are, you have to start your retirement planning, even that if it means me helping you sign up for your 401k. You don't want to do it with me, maybe there's not enough money now. I try to help them find money, but it's always a retirement conversation. There never is not, ever. And then the last part, of course, we talk about estate and wealth transfer, which you know, which you know. But how often did it come in the conversation? Always, always. Because it's better to be in a position to have enough money to retire when you want, not have to work, just to continue to work because you have to. You want to have
Right.
a choice.
Right. Very true. Very true.
I will say this, for anyone who asks the question, we do have some fleet invest bags from our previous meetings. So if anyone asks a question, you'll get a free tote bag on us. So we got some incentive for you guys to, ask questions here.
Oh my gosh, come on, don't you want a tote bag?
Hey, I have a question. I'm not asking because of the tote bag, but so out of like wealth management, right? What makes a financial advisor or financial planner the route to go, right? In someone's career? Because I don't know, I'm a general finance major and I can go pretty much anywhere in any field, but what makes that the right way to go in my career, and what makes Primerica a good fit out of there's the TD Ameritrades, the Charles Schwab's, why that company, and what makes it special?
Okay, well, I think that's a great question. So we have a very niche market. We really serve middle America. There's a lot of different financial companies. Like if we talk about, I don't know, JP Morgan, just like some really, brilliant top companies. You have to love the business. So I don't know if you would want to do this as a career. I think it might be great if you do an internship and you learn about it and you see if you really have a passion for it and a talent for it. But I can't tell you if that's the right direction for you to go in. I mean, would you rather be, I don't know, a CPA? Would you rather be an accountant? Would you rather work for, the IRS? I don't know what you want to do. I love the market. I love numbers. I'm a total analytic, unfortunately. It does stop me a lot of times when I'm doing financial plans or doing my analysis because I'm so analytical. I run so many numbers. And that's really not a good thing. But if you'd like to know more about the opportunity, I'd be happy to share it with you. But I think your professor probably knows you better and may bring some more insight to the table for you. But I think it's good to explore. A lot of people go into one career and then may change and go into another career. Happiness is very important. It's not just always about money. It's good to be happy. Who wants to go to a job every day that you're miserable at? One thing about this job, it's totally flexible. As I said, you could do it, you could have another job, like let's say you're a tax accountant. And then you want to do this in the evenings, or you want to do it on the weekends. You can certainly do that. There's no problem. When you build a business at Primerica or really any other company, you're starting to build residual income. So the first 10 years I was in the business, I will tell you, I had absolutely no social life, none. I mean, I would be there. So the way it was, I'd be there at least by 8. I'm not going to say 7 because that's a lie, but I'd be there like 8 in the morning, and I would not walk out that door till 8 or 9 or 9. So if we didn't have a client appointment, and what we would do is we would have phone clinics where all of us would be together, and we would just call it dialing for dollars, and we get on the phone and we'd be looking for our next client, which is what, that's what we did in those days. That's what we did. But the first 10 years, it was all business. It was either every single day, and I'm talking about Saturdays, I'm talking about Sundays, I'm talking about evenings. Those clients become your family. You walk in, they pour you a glass of wine, they make dinner for you, it's on the table. It's like family. But if it's a good fit for you, Miguel, I don't really know. I can certainly give you the exposure to the business.
Just a little background for me. Like, I've done it, right? I've gone far enough where I've gotten my life and my health insurance license to sell annuity and life insurance. So I have my licenses. The thing is that for me, being in the business, it was long hours, and how can I put this? A lot of it is relationship building, right? But times have changed since you say dialing for dollars. Dialing for dollars is fine, but what do you guys do in terms of the movement in the market and how people change? Because now our generation, really doesn't pick up the phone. And as the wealth kind of gets transferred into millennials and different generations, what is your aspect on how you get your leads? Where are you getting that wealth from? And how you guys are looking for relationships out there? Is it a lot of meetings? And again, I did it for a while. I did it for about 2 or 3 years, and then I kind of moved companies after that. But I never really had a mentor that took me out of the dialing. A lot of it was more of a contact center where I was just dialing phones. So we were making 250, 300 calls a day, just to get the leads. So I would say, do you guys offer mentorships, so that people going into the business kind of see exactly, what to expect?
Absolutely. And you know what, Miguel? I'm so sorry to hear that because that is so hard. That is so difficult. It is a relationship business. It's all about the relationship. And you're correct. Phones do not work anymore. When I say that I sat dialing for dollars, I'm not talking about within the last 10 years. There's many, many ways to build a business. The best way, so you can actually buy a business. There are books for sale. People who retire in the business sell their books.
Is there a gap in which someone could take their book of business from Primerica?
You know what? That's a really good question. There's usually a non-compete.
There's a non-compete. Yeah, there's a non-compete. Yeah. It's usually it's usually 12 months.
I'm not sure if it's 12 months or 2 years. So there is a non-compete really no matter where you go. But I have actually brought my book with me. If I transferred firms, which I have done, I have brought all my clients with me. But you're right. It's a new generation. There's a new way to do business. So referrals, right? Seminars. You go to family, you go to friends, you talk to everybody. We have leads. A lot of people leave Primerica. We will pass that on to you. There is one-on-one training all the time. So you have your life and health, and then since you did annuities, you also have your 6, correct?
No, because I actually worked for a bigger bank. So for a bigger bank, I didn't have to go and get my series. Um, I was limited to the dollar amount. Um, and then anything over that dollar amount had to be transferred to wealth.
I see. Yes, I
So for
see.
example,
Citibank.
I could have only done, an annuity for 50,000, and anything over 50,000 in a dollar amount, I had to transfer it to wealth where it wasn't necessary for them to have their series.
Were you at Bank of America?
TD Bank.
Oh, okay. All right. So, yeah, we would sponsor you for your six. There's many, many ways to build a business, many ways. And there are leads. We do have leads. I worked, there's an advisor here, very lovely girl, very smart, built an incredible business. She never prospected once in her life, not once. She walked into a business and worked as an assistant, was never licensed to an advisor. I guess she was, I believe she was an accountant and she did financial planning as well. And she took over that business. She bought that business from her when she retired. And then she just continued to buy businesses. And she bought businesses in Florida and she bought businesses upstate New York. And her business is tremendous. And she never prospected one day, not one day in her life. So there's many ways to build a business. And it does take time and it does take effort. Maybe you'll be lucky. Maybe you can find somebody to buy their business.
And
And
what are
be
you what
investing
are you
funds.
guys doing in terms of the change? So are you guys sending out more emails? Because pretty much our generation goes online and we can pretty much read reviews and go with a better company, right?
Yes, of
Um,
course.
right. There's a lot of ways that we can get information that was never accessible, right?
Yes.
Back then. So for you guys, what are you guys doing in terms of like how you guys market yourself or as the market becomes a little bit more competitive? Because generally we're talking about who holds the most wealth, right? You know, a lot of us can go to PIMCO and be, financial advisors at PIMCO, which holds the one of the highest wealth buckets in the world, right? So what are you guys doing to kind of make yourself competitive so that you guys kind of take that market share?
Okay.
Is
So,
it's just relationship? So
well,
your
okay. So
clients'
it's really
kids or your clients' kids?
to
Oh,
me,
go ahead. I'm sorry.
to me, it's apples and oranges. Okay, going to work for PIMCO, you're going to work for a mutual fund company, right? To me, that's not a brokerage. That's a mutual fund company. If you go to Fidelity Advisors, you're going to be, there's the mutual fund side and then there's the wealth management side. And people, you don't really have to prospect at Fidelity, I believe. You're just managing their clients. That's what you're doing. You're not actually building any kind of a business for yourself. You're just managing their clients. They own those clients. Those clients were in their retirement plans. They chose to go to, let's say, Fidelity Wealth Management. Those are not your clients. So you're not, to me, working for a mutual fund company, which is fine if that's what you want to do. But if you're going to go into the business, I think it's important to recognize building a business where you can be independent and take that business with you, not that it's really somebody else's client. So yes, do we do marketing? There's tons and tons and tons of marketing. There's so much marketing online. There's so much things to access, which I can show you. There's tons of social media. You send it out to anybody you want, post it on Facebook. Yeah, the phone doesn't work anymore. Nobody answers the phone. That's not a strategy. Not a strategy at all. If you go into a big investment firm as well, they're not going to help you get clients either. They're just not. Do you agree?
Yeah, no, yeah. I think the pay is a little bit different though, right?
What is that? I don't know what's wrong with
I think primarily the big difference between going to a bigger firm and a firm where you kind of can't take your book anywhere is the pay.
Right, exactly.
Because a bigger firm, you're more fixed. You're more of a fixed pay, and in your case, you're um, you're more inclined to make more money because you're basically building that business yourself.
Right, so you're an independent business. You're a 1099, you're not a W-2 employee, where you have to walk in and report every day, like going into Fidelity, even whether you're in the mutual fund side or you're on the wealth management side of it. I mean, I don't think there's anything wrong with it. Every advisor calls in to those companies. I mean, when I'm busy, all I do is call in and say, I need an illustration for a meeting at 4 o'clock today. You know, run the illustration for me. Why should I do it? That's what they're there for, right?
Yeah, that makes sense.
Yeah. Do you love the business, Miguel? Do you love it?
Well, I do totally, something different now. I liked it. I mean, for a big portion of my life, I was in sales. So I did a lot of relationship building. So I did like it in terms of what you could get out of it, right? And yeah, and the only thing that I got out of the business is because I didn't have the correct mentors there to take me to the next level, right? So yeah, so I would say that was the case, but in terms of everything else was fine. The tests weren't too hard, so anybody that is interested, the tests are not too hard, but of course you do have to study like anything else. And yeah, you could get a lot out of it. You get a lot of time for yourself, and of course, the money's not that bad either.
Well, when you build a brokerage book and you start getting residual income and you're bringing in new money, so it's very important. So once upon a time, we'd take the money, we'd invest it in mutual funds, we'd get an upfront payout. It's not really the way business is developed anymore. What we do now is a lot of the money for wealthy clients we can put with a money manager. It's residual income. You're getting paid basically quarterly or annually on that account so that you can continually build that income. And you don't have to look for the next big, investor.
Yeah.
I hope that makes sense to you. I hope it makes sense.
No, it did. I mean,
personally, I would not go work. Education is.
Do you mind putting your email in the chat?
Yeah, I put the for everyone in the chat as well. But just thank you, Fern, for coming and speak to us today. I really appreciate it. Just one thing I will mention to all of our members: no meeting Thursday because the in-person career fair. I really suggest all of you guys to go out there, network with these recruiters. Please go and support FDU Silberman, ourselves, and Career Center. And then my last announcement, we have a brand new treasurer of the club. Yes, we do a brand new one. And actually, he's in this room right now. So Mitchell McPaul is going to be our brand new treasurer of the WMA club. So
Congratulations.
Congratulations, Mitchell.
Anyway, I can't.
Thank you.
Welcome.
I just want to thank you so much for inviting me. It was just so nice to be here with everyone. I really loved it. Thank you so much.
You're welcome, Fern.
Appreciate the invitation.
Thank you. Have a great night.
Great
Bye.
night. Thank you so
Good night,
much.
guys.
Bye.